morning. The Indian stock markets has slowed down substantially after last year's stunning rally. The key indices remain stuck in a range even as the NSE Nifty has made several attempts at breaking free from the range-bound trading pattern. The European debt crisis has only made the task tougher. In fact, there are chances of the market falling further if the situation in Europe does not improve fast enough. China's red-hot economy is yet another cause for worry, even as the US continues to exhibit anemic recovery and the UK is struggling with high budget deficit. Back home, inflation represents the biggest challenge for the market as well as for the policymakers. All eyes are now on the monsoon. Talk of poor start on the rainy season spooked the sentiments on Friday. Hopefully, the IMD's prediction would prove wrong again. Our forecast for today is yet another weak start following the renewed bloodbath in the US and the European markets. Asian markets are mostly trading in the red this morning. The other news for the day is the value of the auction for 3G spectrum moves up to Rs 154 billion. Foreign exchange reserves declined $3.4 billion to $276 billion for the week ending 7th May. Inflation rate eases to 9.59% in April. Petroleum Ministry is planning a new pricing formula that will de-link prices of crude from the production sharing contracts that gas producers sign with the government. GST to likely cover tax on natural gas. Domestic carriers have registered a 22.1% growth by carrying 16 million passengers during January-April 2010. The Controller and Auditor General has recommended an independent agency to monitor toll collection on national highways on alleged leakages. Telecom companies that win the third generation licenses are expected to raise more than 500 billion rupees by way of debt in order to roll out their services. Reliance Industries proposes to set up a joint venture with Russian petrochemical firm Sibur to make synthetic rubber in India. SBI would come out with a retail bond issue of about Rs 2 billion in the first half of the year. Usha Martin is giving a big push to its real estate and education verticals. Tata Motors will soon set up an assembly plant in Roslyn near Pretoria in South Africa to cater to the African market. Moving on to the recommendations, the derivative strategies are: sell RIL future below Rs 1035 for a target price of Rs 1010 and a stop loss is to be placed at Rs 1048, and sell Tata Motors May future at Rs 805 for a target price of Rs 785 and a stop loss is to be placed at Rs 815. The technical calls are: a sell on Sessagoa. Traders are recommended to sell the stock at levels of Rs 370 to Rs 378 for a target price of Rs 355 and a stop loss is to be placed at Rs 387. And a sell on Tata Steel. Traders are recommended to sell the stock at levels of Rs 543 to Rs 551 for a target price of Rs 525 and a stop loss is to be placed at Rs 561. Thank you and have a great day ahead.